What's up guys, Ben here and welcome to Motivation to Invest. Alibaba, Tencent, Baidu, these are all fantastic Chinese companies, but everybody knows about them. So in this video, I'm going to be discussing a Chinese growth stock which I think could be a sleeping giant. But before we dive into that, if you're new around here, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on. Only if you want more investing tips and exclusive stock market picks, which I'm personally investing into. And if you want to take things a step further, hit that first link in the description below and you'll be taken over to the Patreon page. That is where you can find out more about the VIP membership group. In the VIP membership group, you will get access to my buy and sell signals, so when I make my moves, you can make your moves, in addition to my entire six-figure portfolio, the stocks, and the story of how I built that portfolio to where it is today. Also, if you check out the second link in the description, you can find out about the stock research platform I'll be using in this video, which is StockCard. But with that being said, let's dive in. So what's this company? Well, the company is called ZTO Express and is a parcel delivery company based in China. Now, I know what you're thinking, parcel delivery, that doesn't sound that exciting, but honestly, this is one of the most exciting industries right now with all the tailwinds of e-commerce. Now, this is a very established company. They've been going since 2002. Alibaba is actually a strategic partner and investor in the company. So when Alibaba benefits from e-commerce, so does ZTO Express. Back in 2016, this company achieved a leading position to become the #1 player in China in terms of parcel delivery volume. Now that is massive when you consider China's population is 1.42 billion people. So to be the market leader, that's an exceptional feat to achieve. So in 2018, they received a 10% strategic equity investment of $1.38 billion led by Alibaba and another business. Now think about this, let me just fire some facts at you guys. Between 2011 and 2018, this company has experienced a compound annual growth rate on the revenue of 63%. And that was when e-commerce was still taking off. That was before the whole global health crisis, which has been a major tailwind behind e-commerce platforms such as Shopify, Amazon, and many, many more. But this is what I find really special about this company. Diving into the share price for UPS, United Parcel Delivery Service. Back in April, they were around $90 per share, just as the global health crisis hit. The stock then skyrocketed by over 83% this year and is now at $175 per share. So congratulations to those people who are invested into UPS. And UPS has so many different competitors. They're even competing with Amazon, who's trying to actually vertically integrate and have their own delivery service. They've even bought a fleet of planes. But let's take a look at ZTO's share price. And this is why I say this stock could be a sleeping giant. UPS market cap is $125 billion. Remember that number. ZTO Express market cap, $24 billion. So they're $100 billion less on their market cap than UPS, yet they're the #1 leader in parcel delivery volume in China. And look at their share price. It's actually been sliding massively. So the same price as the company was before the whole global health crisis. Now we understand China hasn't been hit as much by this global issue as everybody else, ironically so, but still the stock increased 50% and then it's dropped now by 23%. So that is one reason why this could be a sleeping giant stock right now. Now remember, like all my videos, this is not financial advice. I'm just presenting the information to you guys so you can do your own due diligence and your own research before making any investment decisions. But let's dive into a few more numbers with this stock because we've only looked at a couple of figures so far. So this company has what's called a distinctive network partner business model. And basically it does everything from last mile delivery to last mile pickup. So they will come to your home, pick up the parcel, take it to their depot, sort it, and then drop the parcel off at the other person's property. So so they work with e-commerce merchants, enterprise clients, and individual consumers. Then they have a network of partners who provide pickup and last mile delivery services with 4,500 direct network partners and over 30,100 pickup and delivery outlets. Their core network, they have 86 sorting hubs where they can sort the different parcels, over 5,500 line haul vehicles, over 2,100 line haul routes, and over 98% of cities and counties covered in mainland China. Now that is an incredible feat given the size of China. So this is the largest express delivery company in China and has been since 2016. And to me, that's an incredible feat. You always want to be investing into the market leaders in business areas. So what's the company's competitive advantages? Because that's what we want to know. What's the difference between ZTO Express and all these other companies who are delivering parcels in China? It says they've got a stable network with sophisticated last mile delivery fee and transit fee mechanisms tailored to local market to balance and counterbalance profit among network partners in different regions. So basically, they adjust their business model based on the different regions in China. So let's say it's a very expensive part in China, they have to pay their partners more, then they'll obviously have higher prices. If it's in a more rural, maybe lower cost part of China, then they can actually reduce their costs to become more competitive. Operating efficiency, so they've got a standard design and layout of all the sourcing hubs so they can quickly go through these packages in a very efficient manner. Early built out infrastructure. So these guys invested early into building out all the infrastructure. They had the highest capital expenditure among peer players in the past 5 years. So they had early investments in innovation in sorting automation and IT solutions. So this company from the early days has been investing heavily into sourcing hubs, into IT, into infrastructure in order to make their process as efficient as possible. Now, when you're an investor in the companies doing that and you're actually invested at that time, it can be a little bit worrying because you're thinking, okay, these guys are going to get return on that investment, so these guys are going to have to dilute some shares. But if you're investing in now, that's already been done. The infrastructure is built. They have built it and people have come. If you guys are finding value in this video so far, then feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. So as mentioned earlier, this is a market leader in China. Their market share reached over 20.8%, bringing its target of achieving 25% by 2020 closer. So these guys are trying to own a quarter of the market share in China. So here's a comparison of the companies in China who deliver parcels. So we've got ZTO Express, Yuanda Express, YTO Express, STO Express, Best Express, and FS Express. They all like the word express for some reason. But as you can see, ZTO Express is the top navy blue here. And their market share has actually been increasing over time, while everybody else's market share has been squeezed and decreasing. And that's what we like to see. So let's dive into these numbers. We're here now on StockCard. Very simple platform to use. I've searched the stock here, ZTO. They're on the New York Stock Exchange despite being a Chinese company. And let's dive into these strong operations. So last fiscal year revenue growth, this company has achieved 20.2% rise in growth rate. The revenue for this company year over year has risen by over 27%. 3-year compound annual growth rate, 29%. So that's also fantastic. It shows that it's not just benefiting from this global health crisis. It's actually benefited many, many years ago. And I showed you previously, the company's achieved over 65% compound annual growth rate over the past few years before the global issue, and still as the e-commerce trend was accelerating. So what about profitability? Well, you'll be pleased to know this company is profitable. It's not one of those small growth companies which is reinvesting for profit. They are reinvesting, but still they're profitable. So last year, fiscal earnings per share was around $1, so that's positive. Gross profit margin is 20.95%, which is at least 10% higher than the industry. So that's great to see. That's due to their operational efficiency, the fact the company is vertically integrated when it comes to the sorting hubs, and they have all these delivery partners and they can adjust the prices. That's why they seem to have better margins than everybody else. What about the balance sheet? Does this company have a heap load of debt? Because it seems pretty perfect right now. Well, you'll be glad to know if I dive into the current ratio, which is the short-term cash to short-term debt, this is around 3. Now, generally, I look for a current ratio of at least 1.5 to 2. So this has more than enough short-term cash to cover the short-term debts. That's those due within the next 12 months. Looking at the long-term debt, we look at the debt to equity ratio. No long-term debt or debt is manageable when compared with the company's equity. The company's also cash flow positive. So usually if a company's cash flow negative, then they definitely need a strong balance sheet if they're actually burning through cash. You see this with a lot of airlines. With this company, they're actually cash flow positive and they've got a strong balance sheet. That's what you like to see from any investment into a company. So this is a very interesting company, but what risk can I see with this business right now? Well, the only risk I can personally see with this business is the fact that it's a Chinese stock. So you do have to be aware with Chinese stocks, a bill was passed recently to potentially delist Chinese stocks. I made an entire video about that, so please do check out that video. I'll leave it in the description below. but really Chinese companies should be treated with a little bit more caution than maybe a US company. However, I do believe having a globally diversified portfolio with some Chinese stocks in there is definitely beneficial. It's not for everyone, especially I know many people in the US, they really do stay away from all Chinese stocks. I personally am quite international. I don't mind being diversified. I've got quite a few stocks in China. I'm not overly exposed. My advice would be to not have over 20% or 15% of your portfolio in Chinese stocks. But I'd love to hear your thoughts. What do you guys think of this business? Please do comment your thoughts in the description below. Also, if you guys want to know exactly when I'm personally buying and selling stocks, then be sure to check out the VIP membership group. You'll get access to my buy and sell signals and my 6-figure portfolio, where I reveal the stocks and the story of how I built that portfolio to where it is today. So if that's something you're interested in, there's also so many more benefits. I've actually made an entire video outlining all the different tiers and packages. You'll be around like-minded people who are all moving towards a successful point in their lives. And I'm trying to make this one of the most impactful communities on YouTube. So if you're interested, feel free to check out that link in the description below. Before you think this is one of those $10,000 expensive courses, don't worry, it's only the price of a coffee, so you don't have to worry about that. But I personally think the amount of value you get is absolutely incredible. So if you guys found some value in this video, then feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here and you still haven't subscribed yet, what are you waiting for, guys? Go ahead and hit that subscribe button, turn that notification bell on, only if you want more investing tips and exclusive stock market picks, which I'm personally investing into. With that being said, I hope you guys have a tremendous day, and I'll see you in my next video. Invest safe.